All right, futures unchanged to kick off the week. 30 minutes until it started trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the U.S. and China resume trade talks in London with tariffs, rare earth minerals, and advanced technology topping the agenda. On the corporate front, though, Apple's AI struggles are in focus. And the media giant Warner Brothers Discovery splits into two publicly traded companies. Plus, the race to run New York City heats up. We'll hear from New York City mayoral candidate and former governor Andrew Cuomo in just a few moments. Katie, what are you watching?
Let's talk a little bit more about Warner Brothers. As Matt said, going to split into two publicly traded companies, one with a focus on Warner Brothers TV and film studios, one with the Discovery brands and cable channels. You can see investors loving a spinoff. Shares currently up about 7%.
All right, and I'm looking at Tesla. It is down again this morning, getting hit by a couple of downgrades. Baird cutting the shares to neutral on mounting competition. Argus slashing its rating to hold, growing increasingly concerned about the war of words between President Donald Trump and the CEO of Tesla, Elon Musk. Also watching Apple. The shares are doing a little bit less today. I think they're up just barely in the pre-market, 0.4%. Kicking off, though, its annual developers conference today in Cupertino, and investors are hoping the event can jumpstart a much-needed rally because it's been underperforming the rest of the group, Katie.
Well, let's talk a little bit about the broader market that Apple has been underperforming. You can see futures pretty flat. The color is green, but very contained on this Monday morning. Of course, we had a big finish on Friday to end the week, another weekly gain, and there's plenty of catalysts to talk about this week, Matt, from trade talks, progress there potentially with China. Also, we have inflation data coming this week and a big bond auction. Yeah, I'm very excited. We have on Wednesday a 10-year bond auction. On Thursday, $22 billion of 30-year treasuries, and that's going to be one that we'll be watching closely. Let's turn, though, now to Bloomberg Radio, where Tom Keene and Paul Sweeney are speaking with the former governor, Andrew Cuomo. He's now running for mayor of New York City.
And we welcome Bloomberg Television worldwide. Good morning as we speak with Andrew Cuomo. He's a governor of the Empire State. He's running for mayor here in a contested primary to get to the election November 4th as well. I want to begin with my family. I'm a Kodak brat from Western New York. Yep. And I remember, it was like in Mary Poppins when the weather vane changed there. I remember, this is years ago, and a guy who was in the Pittsburgh Pirates baseball organization, it was a fractured New York City, a fractured Empire State. And your father in the middle 80s pieced it together again. I give the clearest memory of Republicans and Democrats in Western New York going, who is this guy? How are you going to piece together a fractured New York City?
Yeah, it's a very good question. When my father took over at that time, the big fracture was upstate versus downstate.
Yes, right? You lived it.
Yes, we lived it. And upstate for non-New Yorkers, primarily Republican, leaning conservative. New York City at that time, very, very liberal. So that was the big divide. Now it's basically within New York City, and it's really within the Democratic Party. I mean, we have the Democratic-Republican schism, obviously, in New York City, but the Republican Party is relatively small in New York City. But we are working through this. What is the future of the Democratic Party post-Trump? And that is playing out in New York City and cities across the country.
I'm going to give you a vignette. My Bentley was in the garage today. I had to take Uber to come into work. My driver's Dominican Republic, barely speaks English. He was so pleased to talk to me about you. He said, I'm voting for Andrew Cuomo, and this was his exact language. I am a Democrat conservative. I want to go back to Javits, Ed Koch, all of them. How does the conservative Democratic Party of that Dominican Republican driver, how does it move forward out of this primary where the liberals, the progressives, have been so dominant in the verbiage?
Well, this is what's interesting. I was a crazy liberal all my life, right? My father was the son.
My father used to tell me that.
Yeah. I was the son of a crazy liberal and a crazy liberal. But the progressives have gone so far. First of all, I disagree with the word progressive, right? Like it's a new phrase that they coined. FDR was a progressive. My father was a progressive, right? So it's not a new term. But they are so far to the left that they have eclipsed what were traditionally progressive, liberal, use your word, ideology. And it is unrealistic, and it is counterproductive. And that's what people are starting to find out, especially in this environment. You know, post-COVID, cities are going through a crisis. Another hat, I was the former HUD Secretary, Housing and Urban Development under Clinton. And cities have gone through transformations over time. Post-COVID, this is going to be a major transformation for urban America. You don't have to be in a city anymore, right? The old days, you had to be here. The old days, you had to show up. And cities took advantage of that. You didn't have an option. You have options. It's called mobility. It's called remote work. And cities now have to be more competitive. Economically, they have to be competitive. You can move to a better tax climate, a better weather climate. And cities are just now working through that adjustment, I believe.
Right, Paul.
Governor, if you were to be elected governor and mayor of this great city, what would be job one on day one for you?
Job one, problem is job one is like 3 jobs.
Okay.
It's public safety, because nothing works without public safety. It's getting the homeless mentally ill off the streets, which plays into public safety. Quality of life. People feel the city is out of control, right? There's a sense of chaos when you walk down the street.
That is correct.
There's a fear when you descend into the subway now. That's relatively new, right? And that has to change. Before you get to the economics and taxes and are we chasing you out, et cetera, the first thing that chases you out is you're just not safe here. You don't feel comfortable here. And I think that's the first crisis.
Well, and to follow on from that, and talking to Laura Namias, our lead on this, Jessica Tisch gets high marks. Can you give Jessica Tisch high marks in her early months of running NYPD?
Oh, she's done a very good job. She has done a very good job.
Can you say, though, do you reappoint her as that, or do you have someone else in mind? We got to make some news here.
Yeah, we have to make some news. I am not in the, I don't believe in saying who you're going to appoint, who you're not going to appoint. This kind of arrogant until you get the job. I can tell you, I think Commissioner Tisch is doing a very good job. This stability. We went through a number of police commissioners. Each one brought their own tumult and their own transformation. Jessica Tisch is steady. The NYPD feels steady. But the NYPD alone really is not going to be enough to restore to people the sense that I feel comfortable in New York City. It's worth my paying the premium to live here. I pay a premium to live in New York City.
Right.
I'm paying high taxes, but I get X, Y, and Z.
Paul, we just heard that from Charles Cantor.
Exactly
on
right.
the Upper East Side.
You mentioned the subway here, the MTA. I don't know. I've been riding this subway for 35 years every day. I tell people the only thing that's changed in 35 years, the cars are now air conditioned. Everything else is the same, which is a good thing. That's a compliment. It gets millions of people around the city every day. However, as governor, you said the city should pay more for the MTA. As mayor, how would you manage the MTA? Because we've got congestion pricing. We've got a big, big shortfall there. How do we keep this subway riding safely, efficiently?
The first step on the subways is safety, quality of life, getting the homeless, mentally ill off the subways. That's what frightens people. Not just homeless people. Urban environments have homeless people. These are homeless, mentally ill people that threaten individuals, or their presence is threatening. And that has to change. Now, you're right.
Right.
Was it as bad as it was back in the early 90s? No, but a lot of people weren't here in the early 90s, right? And if you were here, really, Bloomberg, Mayor Bloomberg, post, the city was much safer, much cleaner, felt much different. And this is a dramatic juxtaposition to that.
Andrew Cuomo with us, folks. We welcome all of you on Bloomberg Television and Bloomberg Radio across the nation, of course, out on YouTube. Good morning. And, of course, on the nation, Sirius XM Channel 121 as well. We're trying to get him to stay for 2-3 hours. He's saying, yeah, maybe I can't. But we're going to have a good conversation here with the former governor. I want to get this out of the way right now, and it's on all the allegations of this, that, the other, the COVID stuff, the sex stuff, and that. Let's just get it out of the way so we can move on. The fact is, it's reported you've gone after, not gone after in a collegial way, I'm going to say, you have your own litigation, your own lawsuits. These are all distractions if you become mayor. And the floating out there is the idea, okay, now Mike told me once mayor's a 28-hour-a-week job. I don't know if that's true or not, but let's say it's a full commitment to be mayor. Will you push aside all of the different things you're doing in litigation and lawsuits to focus solely on being mayor? Do you postpone them or just say enough? That part is over. That past is over.
Yeah, look, in these jobs, when I was governor, same is true for mayor. If you don't get sued 5 times a day, you're not doing your job, you know? So you have to be very good at compartmentalizing, to use a word, but handing off pieces that are not currently relevant. And that has to be done no matter what.
We saw some very disturbing images coming out of the city of Los Angeles over the weekend. How do you view kind of, I guess, just kind of how we deal with immigrants, how we deal with the policing of our cities vis-a-vis the federal government sending in troops? When you looked at the images this weekend of Los Angeles, how did you project that upon New York City?
This gets into President Trump's strategy, I believe. And look, first of all, on the immigration issue, he was very clear in his campaign. He believes it's an issue that works for him. During the campaign, he said he was going to deport criminals, dangerous criminals. And everybody said, yes, support dangerous criminals, of course. Now we're deporting 7-year-olds and we're disrupting families. And by the way, we're deporting people who shouldn't be deported. So that's a change. But this issue works for the president politically. The president is also very good, and I worked with the president in the first Trump administration, worked with euphemism. We had a lot of controversy, but this is a different tempo for him. Wayne Gretzky, skate to where the puck is going to be, not where it was. The Democrats have to adjust. They are skating to where the puck was. This immigration issue, in some ways, is a distraction from what Trump is really doing with cities, which is cutting the budget in a way that is so dramatic that you could really cause major difficulties for urban areas.
Governor Cuomo, pro tip. When you're going to talk a hockey, you're in a mayoral race. You pick Jean Rattel or someone like that with the New York Rangers. You don't go with Gretzky. Andrew Cuomo with us here as we look at this mayoral race. Okay, Robert Kuttner, no friend of yours, writing in American Prospect. He says, did Cuomo peak too soon? You've got the tensions of the primary. If you take the primary, the tensions of a general election with different independent candidates, and that is the present mayor in the back pocket of the president of the United States. And if we get L.A., as Paul mentions, here, can you imagine this? I mean, I'll let you pick the geography, Governor Cuomo, but the present mayor of New York, can he protect the citizens of this city, given the relationship with the president after what we've seen in L.A.?
Short answer, no. And let's remember how extraordinary these issues, what's happening in L.A. This is the exact reverse of what normally happens. Normally, it's the local government that makes the decision on how to handle an emergency and calls on the federal government. So a mayor or a governor would call on the federal government and say, I need help, please send the National Guard, or please send in additional federal help. I don't believe there's been a time where the president has sent in federal troops. You'd have to go back to like the 60s, and President Johnson and Wallace, right? That's how far you have to go back. So this is Trump being Trump. This is Trump on this issue of immigration. I'm muscled. It's law and order. These cities, these Democrats, they're filled with illegals, and I'm going to come in, and I'm going to come in hot and heavy. He started in L.A. It will happen in New York. It will happen. He knows the formula, right? It happened in New Jersey.
Is this formula to go after you? I mean, this is anticipated.
His formula is to create chaos in the cities, and he is the voice of law and order. And, you know, cities, all those Democrats, that's where all those illegal immigrants are, and he's going to come in and he's going to clean up. The flip side is, okay, create chaos in L.A., create chaos in New York, create chaos in Chicago. Pretty soon, you create chaos in the nation, and that's bad for the economy.
So what is the biggest challenge for you in this primary race here, and then potentially in the general election? What do you have to get across?
In a Democratic primary, you now have the tension between post-Trump, what directions does the Democratic Party go? And some people believe we lost to Trump because we didn't go left enough. So I have a Democratic socialist. Really, there's no such thing as a Democratic socialist. It's just a socialist. They use Democratic as a modifier because socialist is a little shocking. But it's a socialist who says dismantle the police. The police state is oppressive. Everything free transportation, free everything, tax the rich. So there's class warfare in there. We'll tax the 1%. The 1% should pay because they're rich and fat and they made money on the rest of us, and everything is free.
Let's migrate to the Financial Times. They had that summary article this week, and Andrew Cuomo with us, folks, and we welcome all of you on Bloomberg Television and Bloomberg Radio worldwide, and of course here in the tri-state area, Bloomberg 1130 across the 5 boroughs. The FT lined up the haves who are supporting you. You're the guy of choice. And the answer is some of them really are behind Andrew Cuomo, and others are betting this guy might win, so we better get behind with him. How do you say take the landlords, and they gave you X number of million? I would say that's like almost normal politics. But then how do you protect tenants and renters in a city of horrific housing economics?
Yeah, well, first, if you are going to be in elected office, you cannot be influenced by who gives you money, right? That's rule number one. That's like saying to a journalist, well, look at who's taking advertising in your newspaper and write favorable things about the advertisers. Then you're not a journalist. It's unethical. And I've been in elected office many times. I've raised hundreds of millions of dollars. It can't matter who gives you money. Now, to the extent people are supporting me who are institutional interests, because institutional interests need a city that works, right? They want a city with a future. What they're afraid of is you elect a socialist who tries to give everything away free, doubles the taxes on the wealthy, and the wealthy say, that's it, I'm gone. By the way, we lost 500,000 people since COVID to begin with. You're now going to double taxes, and people will say, I'm going to Florida, I'm going to Texas, et cetera. It's not worth the premium, especially since the quality of life has deteriorated, and I'm afraid to get on the subways. So why would I pay the premium to live here when I'm not getting the benefit of living here? I'll go to Texas, I'll go to Florida, I'll come back a few times a year, I'll see a play, I can hire a private jet with the tax savings. That's what we have to worry about.
Governor, speaking of Trump's relationship with city mayors, President Trump's Justice Department is investigating you over allegations you lied to Congress about COVID. You said that that's politically motivated, but how afraid are you of the possibility of getting indicted, perhaps even arrested by the Trump administration? That's got to be on the table.
Yeah, no, this is a joke. This investigation is a joke. But there's no doubt that Donald Trump uses the Department of Justice and the justice system as one of the tools in the political arsenal. When I was governor and dealt with Trump in the first administration, he investigated me twice with the Department of Justice. That's sort of like his left jab, just keep throwing it out there.
I want to go back here, and I want to get back to the primary, the election at hand. Laura's saying, okay, all this big picture stuff is great. You got to win a primary. You got to get on to the election. How about 1977? Folks, this is New York City and the 5 boroughs. Bella Abzug took Manhattan. Abe Beame took Brooklyn. Badillo took the Bronx. A guy named Cuomo took Queens and Staten Island. And Ed Koch won. That's how nuts New York City is. Which geography right now is most critical for you in the 5 boroughs for you to take this primary?
Yeah, it's interesting. Back in 1977, the boroughs were more homogenous and sort of class-oriented. That has changed over time. The basic division is you have younger, more activist, more progressive, if you will, voters who identify as socialists. They will say, I am socialist. I say tax the rich. I say everything should be free. Palestine factors in there. Right. And that's one demographic. And then you have a second demographic, which is a little bit older, more mainstream, if you will, and that's the demographic that I appeal to.
You brought up Palestine. Let's go there right now. There's a unique relationship of this city with Israel. Everyone knows this. We see nationwide a new form, a new debate over anti-Semitism. I think of Arthur Levitt. My household happened to worship his father a million years ago. Explain to me your relationship with Israel as mayor of New York City. How will that be distinctive given the horror that we see in the Levant?
Well, it's a great question. And it is unique to New York, I believe. If you grow up in New York the way I have, the Jewish community is such an integral part of New York, right? New York is not New York without the Jewish community. Jewish community started coming to New York in 1650, 100 years before the other immigration groups, and they have been in major institutions. So you grow up with the Jewish community. I have 2 brothers-in-law who are Jewish. My son-in-law is Jewish. It's that close a connection. And I've been 100% supportive of Israel. My father was before me. I've done numerous trips to Israel. I was very aggressive supporting Israel. This was the first state to go against boycott, discriminate, disinvestment, and sanctions for Israel. So it is a very pro-Israel state.
Paul, get one in here, please.
Governor, no one presumably, arguably, takes the air out of the room more than President Trump. He just demands the media attention in a way we've never seen before. Are you surprised that the Democratic Party, no one has stepped up, no voice has emerged to at least counter some of the policies and some of the arguments coming out of the Trump administration? And would you relish that role at some point?
Well, I'll go back to the Wayne Gretzky quote that I wasn't supposed to use.
Quote a Ranger. Rangers. You're in New York.
He was a Ranger. He was a Ranger.
Mark Messier, please.
First, the Democrats have to get the cadence of the game. They are coming up a day late, right? I don't believe this. I believe this immigration and Los Angeles, and it's going to get worse, and it's going to be New York. I believe this works politically for Donald Trump. I also believe it masks the budget debate, which is really the consequential debate for urban America short term. And he's onto a new topic now. And the Democrats wind up a day late, because if you're arguing about the budget today, you're missing Los Angeles and New Jersey and the whole immigration debate.
We're going to wrap up here in a moment here for Bloomberg Television and Bloomberg Radio. Andrew Cuomo with his Politico. There was a mayor from Chicago who can be a little spicy named Emmanuel. He's out this weekend, and Rama's all wound up about the weak in the woke Democratic Party brand. And I would say he was basically, he as mayor of Chicago and potentially you as mayor of New York are the ones fighting the fight to get the Democratic Party to get some backbone. Does that lead to a presidential effort in 2028? I mean, is the Democratic Party going to shift back to that centrist tendency that we talked about in 1985?
Centrist, forget the trying to define political ideology. I worked with Rahm in the Clinton administration. It's sort of practical and common sense, right? The Democrats lost to Trump. Why did we lose to Trump? I don't believe Trump won. I believe the Democrats lost. I believe what happened is the Democrats became disconnected from their people. They became disconnected from the kitchen table issues. Talk to me about my mortgage. Talk to me about my job. Talk to me about the economy. Talk to me about public safety. I don't want to hear about these esoteric issues right now when I'm worried about my life today. And do something for me. You're the Democratic Party. The Democratic Party fundamentally believes in the functionality of government, and you haven't functioned. Show me something that you did for me that made a difference in my life. Joe Biden, you were president. What did you do that I can see, feel, or touch? That's where the Democrats blew.
Paul, this is so important. I want to get back to some of the basic stuff Paul was talking about. I mean, day one, the congestion tax. Day one, bike lanes. Day one, nobody can afford to live in this city. What's the day? Paul asked us earlier. What's your day one mandate to those kitchen table Democrats, independents, and disaffected Republicans?
What they're saying first is make me safe. I'm afraid to take the subways. And I haven't felt that way in 15 years. Make me safe. And that is public safety, that's mentally ill, homeless, et cetera. Blending into quality of life. That's job one. And then affordability, I need to be able to pay the rent.
I got 45 seconds because of all the fancy stuff here in the Bloomberg News organization. Your father stopped America with a convention speech. Are you going to be at a convention running for president in the future?
I'm running for mayor, and that's enough.
Andrew Cuomo, thank you so much. Greatly appreciated this morning. Did we get everything in there? I think we
so.
did.
We did all right. We did all right.
Red Sox beat the Yankees 2 out of 3 this weekend. I thought that was
they got lucky. They got lucky. They got lucky.
So
solid.
Never again. Never again. Andrew Cuomo, thank you so much. Greatly appreciated, Governor.
Thank you very
for your
much.
attendance there today. We said good morning.
Really a fantastic interview there with Andrew Cuomo, Bloomberg's Tom Keene and Paul Sweeney in the radio studio, but simulcasting it across the nation and the globe. I think, Katie, one of the most interesting things is that Tom Keene is not only a huge fan of the sport of hockey and has been for his entire life, but he plays hockey and seems not to understand that Wayne Gretzky did play for the Rangers here in New York.
He didn't want to talk about it. You know, who was the other man he was talking about?
Mark Messier.
Yeah, I'm not a hockey person, so it was all lost on me. But a great interview, trying to push Andrew Cuomo to on his future political ambitions. But he was clear he's running for mayor of New York right now. Should we talk about this equity market?
Yeah, let's talk about the market because we've had very little movement in terms of futures ahead of the opening bell, which is in 1 minute from now. We're looking at green arrows. They're just not big gains. And there are a number number of really consequential events that could move the market this week.
Absolutely.
And in fact, we're sort of sitting in the middle of one right now. The U.S. is negotiating with China in London.
We know that some of our key people from the U.S. side have arrived in London, of course. Round two, I think it's safe to call it, of these current trade talks with China. We'll see what they get. It seems like the focus for the Chinese side is those chip exports. The focus for the U.S. side is to get those rare earth metals and minerals flowing once again. We'll see if anything substantial is actually agreed upon or the groundwork being laid. And that's certainly what this market is looking for in terms of a catalyst.
Yeah, absolutely. We also get inflation data out on Wednesday, which I think everyone is pretty calm in terms of the CPI, PCE, PPI picture. But we get the bond auctions this week, which normally are such a yawn. I mean, there's nothing that I can imagine more boring than a bond auction, except for this week, right?
They
the 10-year
matter when they matter.
That's right. We'll have Lisa Abramowitz on to join us Thursday because $22 billion of 30-year bonds will be auctioned off at the U.S. Treasury. You see the opening bells and hear the opening bells there on the NASDAQ and market site. You have Bowman ringing the opening bell, celebrating, I don't know what, but over the last 5 years, I noticed the stock has almost doubled, so that's pretty good. Lionsgate celebrating an independent listing on the NYSE. It's only been a couple of months now, but they have lost 1/5 of the value of their company since they listed.
Well, let's talk about some other specific stocks. Specifically in the media space, we have to talk about Warner Brothers and Discovery announcing that they will separate into two publicly traded companies, splitting its streaming and studios business from its cable TV network. You can see shares up about 10% right now if you round up. Spinoffs have been hot, and this particular spinoff announcement very well received today.
Yeah. It is an interesting story in terms of the individual stocks, I guess. I don't know why we care
We're going to
that
talk
much.
about it. We're going to
No, we will talk about it.
Stay
Also,
tuned. It'll be great.
Apple's Worldwide Developers Conference gets underway today. Investors in need of an AI roadmap for this particular company because the shares are down 19% year to date. You can see they're up a little bit on the day, but it's really underperformed the rest of the Mag 7. It's underperformed the rest of the S&P. Apple has, and this is a company that touches so many others in the global markets. For more on Apple, we're joined by Bloomberg Technology co-host Caroline Hyde here on set. So the WWDC kicks off today, and you know what? Siri still can't do anything close to what Geppetto can do. Why do we need to buy Apple products right now?
That is what they've got to vindicate. And I'm afraid if you wanted some answer to AI existential issues with Apple, you're not going to be getting it. Instead, you're going to be getting, well, a new way to cool operating system upgrades. They're going to be named by the year. So we're going to be bracing ourselves for 2026, so 26 across the board. And basically an OS overhaul that means that your products in Apple will all work so much more seamlessly together. But this isn't stopping the analyst downgrades. This is why you see Laura Martin pile on last week, yet more and more cutting their views on Apple. We now have plenty of hold ratings, only about 4 sell ratings, but ultimately they need to show why you're going to be buying the next set of hardware. Yes, it's going to look more beautiful. Yes, it's going to have curved edges. Yes, it's going to have tiny bezels, as we have Mark Gurman reporting. But will it have AI introduced throughout? And he has a great analogy within his story. You've got to read Power On if ever you get that to your email on the weekend. And he's saying basically it's like the auto gas to EV transition. Matt, that's why I bring it up because I know you're going to love it. Basically, Apple makes the best operating system on the street like a gas car. But at the moment, we're sort of getting a hybrid involvement when you're looking to interject Apple Intelligence because it depends upon OpenAI. But other automakers, so other phone makers, have a pure EV that looks beautiful, and we got Google with Android managing to intertwine it within the entire operating system. Thus far, Apple has not made that transition.
And by the way, even in the car, so it used to be that if you drove a car over the last few years that didn't have Apple CarPlay, it was a total failure. Now, General Motors has built an operating system together with Google, right, that doesn't really necessitate Apple CarPlay. You just don't need it. I mean, what they have in Chevy, Cadillac, General Motors cars is good enough that it doesn't matter. And that's a real problem.
My analogy has gone purely cars
I do have to say, I have CarPlay in my Genesis, and I can't imagine living without it. I mean, I can, but to exaggerate the point there. That's one issue, though. I do like the way that our Bloomberg News colleagues framed it in the lead up to this event. When it comes to Apple's struggles that, okay, you have the fact that it seems like their upgrade cycle isn't looking too hot, they're behind on AI, and that's separate from what's going on with trade policy and trade issues. I mean, at this point, when you take a look and you survey the analyst community that really has fallen out of love with Apple, what is the bigger issue right now?
There's plenty, because also you've got the issues of whether they're going to be getting $20 billion a year from Google in terms of payments to ensure that Apple keeps Google Search as its primary offering. That's going to be under the gun. We've also got the worry about what the App Store's future is going to be, if they're going to be curtailed in terms of taking certain payments. Certainly the Epic Gains, Epic Win is going to be an issue there. And then, of course, on top of it, you've got the supply chain headaches, which Tim Cook thus far has not navigated well from a political perspective, it feels like to many. What is the answer? Yes, you can put more into the hands of India and ship them across to the United States, but long term, how is Tim Cook going to respond to President Trump's demands to build and manufacture more in the United States? So you've got trade, you've got the issues of, well, monopolization of certain industries here in the US and what that means from a regulatory perspective. And on top of that, you've got the fact that AI just isn't integrated within the operating system more broadly. So a lot of challenges, and that's why you see the analyst community getting a little bit more negative. In fact, you've never seen less than 60% really of the analysts saying not to buy at the moment.
Okay, Caroline, thanks very much. Very much looking forward to your program today. The new Bloomberg Technology at 11 a.m.
Bloomberg
Is it
Tech.
new?
It's got a whole new name. It's called Bloomberg Tech.
So you've just shortened the second
We have.
part. And that's,
Isn't that
any other
beautiful?
changes, or is that?
We got some nice graphics.
Okay.
Come play.
All right.
Tune in,
I will watch. I'll
Europe,
watch.
Asia, they're going to be involved a little bit more. We're a whole
global,
new
baby.
global
I'll
perspective.
watch. Let's get some Americans on that show. Coming up this Friday, Bloomberg Tech Europe also kicked off, hosted by Tom McKenzie. Basically, we only have British people covering technology here
Okay, all right.
at Bloomberg. Let's bring in RBC head of U.S. equity trading strategy, Lori Calvasina. Her team just raised its target to, I think, 5730 for the S&P 500. And I don't know, I'm sure you've noticed, but we're way ahead of that now.
Yeah.
And earnings revisions are going up. So why so dour?
So I would say on your latter point, you know, and I got a bunch of questions on this topic of earnings last week, and I'll say we did raise the target last Monday. So, you know, we've been having this conversation for a while, but on earnings, you know, I think people are maybe overstating the excitement there a little bit. So if you look at the rate of upward revisions, which is my favorite gauge of earnings sentiment, just the degree to which analysts are pulling numbers up, not in terms of the magnitude, but just up or down, yes or no. That stat earlier this year bottomed out at 28.5%. It is now a little above 50%, okay? It's not like we're back to 100% upward revisions or 80% upward revisions where everyone is just yanking their numbers, you know, up, left, and right. If you look at 2025 numbers on a bottom-up consensus dollar value basis, we're still hovering around 264. For next year, we're still hovering around 299, and those numbers have been trimmed. And you know, we've seen 2026 inch up just a little bit, but we're not off to the races. So we think people are kind of making a mountain out of a molehill here.
We actually have built a chart.
Have we?
I don't think anyone knows, but we build charts in the morning and we assign numbers to them, and this one is 322 in the chart library. And occasionally, we manage to pull one or two up.
I imagine that there it is.
There
and
we
as
go,
you can
Joe.
see,
Thank you.
You see the white line, the blue line coming up. That is sort of mirroring what you're talking about here. Not exactly off to the races, to your point.
You know, and where we feel, you know, we've been answering this question for the last few weeks. And I would say on purpose, you know, I do go by the numbers, but I did purposefully want to send people the message that we're not right back to where we were in January. And so if you think back to that last, you know, kind of China-U.S. trade de-escalation, I was literally getting that question on Monday and Tuesday. Why aren't you just slapping your 6,600 target that you had in January back on? I said the world is not back to where we were in January. And you can see that when you look at these bottom-up growth rates on EPS. You can see it on GDP forecasts. I think the consensus on GDP right now for this year is around like 1.4. It's inched up, you know, it's kind of stabilized. Next year is inched up a tiny bit, but they're still pretty sluggish numbers. And the 2026 number was actually, I think around 2%. So, we just haven't seen, whether it's earnings, whether it's seen economic data, not just RBC economics, not just my numbers, but street-wide, the numbers just haven't gone back to where they were.
Right.
And our 5730 comes out of a result of our valuation and earnings modeling, and I'm not going to nerd out here and give you all the details on that. But we are baking in a better economic environment, a better inflationary environment than what we were, say, 4 to 6 weeks ago. But again, just not as good as it was.
I think you make a great point, too, that we're not back to where we were in January. And one of the pushbacks I've heard to positive trade momentum is that the Trump administration is putting out fires that they created. So it's a different world there. But I want to go back to the earnings revisions, because you point out in one of your notes from the past 24 hours that estimates have been raised for all sectors except the likes of consumer discretionary, consumer staples, and REITs. So consumer discretionary, consumer staples, the fact that those estimates haven't come up, where does that leave the consumer?
Well, it's interesting. Another stat that we track on earnings is how companies are reacting to beats. And what we saw throughout most of this reporting season was that companies, were outperforming the broad market when they'd post these earning beats, and arguably those companies, had good outlook commentary as well. And we've really seen that reverse. We're actually not seeing those beats generate pops in the market since we kicked into the heavy part of consumer reporting season. And, if I kind of go through and think about consumer companies versus industrial companies versus financial companies, there's a stark contrast. The financial companies look at the higher level stats and they say, everything's fine, the consumer's still spending. It's actually good that they're being, a little bit more cautious in their spend because they're behaving responsibly. The industrial companies are saying we're going to mitigate everything, pass along pricing, very confident tone. Then you get to the consumer companies and it's hit or miss. It varies a lot between companies, and they're not so clear that they can pass on pricing. They're talking about weakness under the surface that they're seeing in terms of consumer behavior. So it's not surprising to me that we've, sort of seen those reactions to the releases really stumble in here, because it's not, sort of a clear, rosy picture when you dig into some of these consumer results.
What needs to happen, Lori, for you to get more bullish? I mean, Mike Wilson comes on this show. And, he's got claws, but he still has a 6,500 target for the S&P. He's jazzed.
So, look, I'll tell you, the model that we've got for this year, the 2025, and we have like 5 different models, by the way, and 5730 is the median. It's our valuation and earnings work. And, there we're baking in, kind of a GDP number in the 1 to 2% range. So I would really want to see GDP get kind of kicked into that 2% range plus for this year. We'd also want to see inflation numbers, kind of come down a bit more. Our economists are looking for numbers, kind of in the kind of upper 2% range for the end of the year.
For CPI, right? Because PCE is at 2.
Right. We have one model that uses CPI, another that uses PCE. So we'd really want to see inflation come down a bit more, because that's depressing the PE multiple. I will say, though, when you look out longer term, my model for next year, when we sort of input consensus numbers on earnings, different macro variables, there are a few different scenarios we run, but we can get to a range of 6,200 to 6,800.
Right.
So, we don't feel doom and gloom, but we feel like for where we are right now in the macro backdrop that we have some decent visibility on, we feel like we're kind of fairly valued to a little bit over our skis.
Well, you won't have to wait long, at least when it comes to CPI. Those numbers coming out on Wednesday morning. Got to leave it there. Lori, great to kick off the week with you. That is RBC's Lori Calvasina. Meanwhile, let's get a check on these markets right now, because the S&P 500 almost perfectly unchanged right now, trading on a knife's edge as we await some of those catalysts in the form of trade, in the form of inflation data. Let's take a look at where we stand right now. Almost an even split when it comes to what's gaining and what's losing. 262 names in the green, slightly less than that in the red right now. You take a look at what is trying to drive this market higher. You have the likes of NVIDIA, Meta, Alphabet, Apple. The list goes on, all the names you would want to see. But then you take a look at the downside here, what isn't doing too hot. You have Intuitive Surgical, but then you have the likes of Tesla and Broadcom, Microsoft weighing on this index. So a real push and pull going on. Let's take a look at how this plays out on the sector level as well. You can see up at the top, communication services. That's actually exactly what I want to click into right now, because the sector is up 0.7%, and right at the top, Warner Brothers Discovery. And that's after news that the company is splitting into 2 publicly traded companies, separating its streaming and studios business and its TV network operations by the middle of next year. Let's get a better understanding now with Bloomberg Intelligence media analyst Geetha Ranganathan. And clearly you can see that investors voting with their feet here, saying that this is a good idea. What's your take to this news this morning?
Yeah, absolutely, Katie. So this is something that, all media companies have been challenged with. You have two very distinct businesses. One is the TV networks business, which is secularly challenged because of cord cutting, because people are leaving the pay TV ecosystem, but still generates a good deal of amount of, EBITDA and cash. And then on the other side, you have, either the studios business or the streaming business, which up until now has really kind of been pressured by losses. But I think finally we're kind of seeing that business kind of really gain momentum with profitability. And you really have a disconnect here because you have a growth profile for the streaming business that is extremely bright, and for the TV networks that is not so bright, and kind of having them all under the same umbrella really depresses valuation. So by separating out the two businesses with very different growth profiles, what Warner Brothers Discovery is going to be able to do is kind of really narrow that valuation disconnect, and it becomes kind of this positive catalyst for boosting the multiples and valuation.
All right, Geetha, thanks very much. Geetha Ranganathan talking to us about Warner Brothers Discovery and the split that is driving at least one of those stocks higher by almost 10%. Coming up, the U.S. and China restart trade talks. We're live in London next. For the latest, this is Open Interest. The U.S. and China resume trade talks today in London. Tariffs, rare earth minerals, and advanced technology, as well as maybe student visas, are on the agenda. National Economic Council head Kevin Hassett spoke on Face the Nation yesterday.
Well, you can be certain that there's going to be some tariffs, and the stuff that folks have been saying is going to happen to tariffs is inconsistent with what you and I have talked about before, Margaret. So what's going on, right, is that we've had a trade deficit with China forever and ever because they just want to sell stuff here so that they can create jobs in China and help, control their government so people are unemployed, that it's harder for a dictatorship to run.
Joining us live from Lancaster House in London for more is Anne-Marie Horton, Bloomberg's chief political correspondent and the co-host of Bloomberg Surveillance. So, in that role, Anne-Marie, you hear all the time, they don't just sell stuff here, the Chinese, they also invest in the U.S. They buy our treasuries. Is that going to be part of the discussion today?
I'm not sure. I think really part of the discussion today are two things that both China wants out of this, tangible, and also Washington wants out of this. So what China wants to see, and potentially with the inclusion of Secretary Howard Lutnick, we are going to see that, some easing of export controls. Kevin Hassett, the NEC director, speaking earlier to the American press, talking about the fact that they are going to ease some export controls. The question I have is, what is the red line when it comes to export controls? Is it some recent things we've saw, like jet engine parts, or are they willing to go as far as putting NVIDIA's H20 chips on the table? And then what does Washington really want out of this discussion? They want to make sure that they can get access to the rare earths, the magnets that are used in things like the defense sector, in mobile phones, in the high-tech industry, at a more advanced pace. And we heard that from Kevin Hassett as well. So those are the two big deliverables, which basically mean just a little bit more details and meat from the when the delegations met just a month ago in Geneva. Some other issues likely to come up because these individuals don't always meet all the time. And remember, there is potentially a grand deal to be had. The Treasury Secretary has said that to me months ago. They don't want to fully decouple from China. There could be a grand deal to be had. But I would say today it's really about China getting access to more chips and the U.S. making sure they have those rare earths.
Well, Anne-Marie, you bring up the talks in Geneva, which happened last month, and here we are a month later. How can we be certain, how can either side be certain that we're not going to end up in this situation again where both sides feel like the other side is reneged on whatever they discuss in London this time around?
Well, that's a great question. I think the Treasury Secretary has talked a lot about how a process is in place and they have a mechanism. So I imagine if we do see another bout of escalation, as we saw the past 4 weeks, then potentially there'll be another meeting, or what we saw last week, a phone call between President Trump and Xi Jinping, which really led to these delegations, these officials, to be able to meet in London. that really becomes a question when it comes to how much the U.S. is willing to lift and ease these export controls. Because remember, what we saw over the past 4 weeks is a ratcheting up of tension for those export controls. So how much leverage are they going to have going forward to potentially have more export controls, use them on China, and at the same time not make sure that China is going to want to then ratchet back the licensing when it comes to rare earth and magnets. I would say today is really about the de-escalation of the past 4 weeks escalation we saw. But I think what this shows and proves is that to get a grand deal, this is going to take a really long time. And we should remember, during Trump's first administration, the trade war started, the phase 1 deal happened in 2020, but it started in 2018.
Right.
This is a process that takes months and years, not days.
Well, Anne-Marie, you brought up the word leverage, and we don't have much time left, but I want to talk about that a little bit, because the fact that you had President Xi get on the phone with President Trump, something that the Chinese side has said that they didn't necessarily want to do, and then the fact that these talks are happening at all, does that say anything about which side holds the upper hand here?
I think they both have leverage here. They both have different choke points. For China, it's getting access to the semiconductors, and for the United States, it's to make sure that they have access to those rare earths. I think what this shows is that it's very challenging to decouple these two advanced, biggest economies in the world. And even if the United States want to de-risk from China from a national security perspective, they potentially need to make some concessions if they want things out of China. And I think this just proves how difficult these negotiations are.
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horton there reporting live from London. Coming up in the next hour, Henrietta Treyz of Veda Partners will talk trade priorities as well as the tax bill and the anti-deportation protests in London. That's all coming up on, in Los Angeles, not in London. My head is stuck on the continent. This is Bloomberg.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Tesla getting cut over at Baird thanks to the Musk-Trump spat and Musk's overly optimistic robotaxi projections. Argus also out, slashing its rating on the company as well. Next up, Lululemon getting cut at Morgan Stanley after reporting a slowing growth outlook. The analyst says increased competition and a shifting consumer mindset will pressure the business. And finally, we have General Mills getting a downgrade from Goldman Sachs. The firm says food companies will face many headwinds, including higher costs, tepid volume, and increasing competition from private label and smaller brands. Matt Miller.
All right, coming up in the next hour, Peter Oppenheimer joins us from Goldman Sachs to talk about the wave of S&P 500 target boosts we've seen. And then, as I said, Henrietta Treyz on the protests, the riots, maybe, in Los Angeles. This is Bloomberg. We are 30 minutes into the trading day and looking at a really little changed picture in terms of stocks. The S&P unchanged, NASDAQ basically unchanged, the 10-year yield pretty much unchanged. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. Shalai Bassick is on assignment, and the S&P 500 really on a knife's edge right now at 6,000 almost perfectly. It's going to be interesting to see whether actually this level is going to act as a support or a resistance level. Yeah, it will. There are a lot of catalysts, as we've been talking about this week. One of them we're going to cover coming up. And then we've got, well, I don't know, maybe we'll cover all of them. Obviously, the inflation data. We've got the bond auction, so a lot to talk about. Yeah, well, one of the things we're going to talk about is the U.S. and China resuming trade talks in London with tariffs, rare earth minerals, and advanced technology topping the agenda. Also, tensions are escalating in California, as I mentioned, not in London on this story. Anti-deportation protesters clashing with law enforcement in L.A., setting, as you can see, cars on fire, for instance. President Trump is going to deploy thousands of troops. Well, tensions are high in London, but for a different reason. We're also going to talk about the corporate front. Apple's developer event may show that it's still far from being an AI leader. We'll get a live report from Cupertino. Wall Street strategists are growing more optimistic, and
U.S. stocks, as we've just shown you, have reached 6,000, at least on the S&P 500. Mike Wilson of Morgan Stanley, normally ever the bear, says the sharp drawdown in April was the end of a much longer correction. David Kostin over at Goldman Sachs says the market continues to gain confidence as a result of improving soft data and friendly policy news from Washington. Joining us to talk more about this out of London is Goldman Sachs Chief Global Equity Strategist Peter Oppenheimer. And Peter, I think it's interesting that even though we've come back up 20% plus from the bottom in April, the U.S. is still trailing the rest of the world in terms of stock performance this year. Do you think we have more room to run here?
Yes, Matt, I do. I think, our main theme for this year has been about diversification, and that's across geographies, across factors and sectors. And I think that it's growing in appeal. We're seeing more consensus building on the potential for further declines in the US dollar, given the scale of the deficits in the US, and somewhat slower growth relative to its previous trend. And also the very big gap in valuations that exists between the US and other markets. The US is back to where it was at the beginning of this year, trading at around 21 times. Take Europe, for example, trading at around 14 times PE. And I think the combination of potential dollar weakness and that valuation gap is leading to a bigger shift outside of the US as people diversify.
Well, talk to us a little bit more about the dollar, because it's interesting to see the dollar just not be able to get its legs back under it. It feels like nothing will lift this currency higher. When it comes to the relationship between U.S. equities and between the dollar, just give us a little bit more color there on what you see that dynamic looking like going forward.
Well, it's a complicated relationship because the U.S. is a more domestic market than many. You take Europe, for example, you have a higher proportion of companies with direct exposure to the US than is true in reverse. Of course, the biggest tech stocks tend to be very globally exposed, and there'll be some headwind in terms of, for some companies, there's going to be a headwind in terms of currency translation. But overall, I think the dollar weakness is a reflection of just a change in the margin at the risk premium attached to US assets. The scale of the US deficits remain very large. And of course, the US administration is encouraging, in a sense, a slightly weaker dollar to make it more competitive. And I don't think this is a big disadvantage for the US, but for US investors, it does leave the opportunity to get better returns when translated into the dollar, when people look outside of the US really for the first time for many years. So I don't think it's a big headwind for the US economy or indeed the market overall, but it just grows the opportunity set for US investors.
Peter, I wonder if the Meta news from this weekend points in a new direction for investment. For a lot of people, the AI had been about the chips, the infrastructure, as well as, the software and the use cases. But the data seems to be a third part that I didn't really think about very much. Maybe that's just me, but now Meta's putting $10 billion into a data company. Do you see real opportunity there for sort of a third leg of the AI stool as an investment opportunity?
Yeah, Matt, we do. And I think you raise a very good point here that up until now, the market has attributed a lot of the value of the potential of AI to a small number of super large companies in the software and the semis space. But as you get new competition coming through and the costs come down, the user case increases, more companies take up AI, you're going to get a lot of potential, I think, in companies that are generating revenues from new products and services on the back of these foundational models. And that's an area, again, which opens up the scope for more diversification for investors. In other words, a broader set of opportunities within the technology space, and indeed companies that can benefit from utilizing these technologies in other industries. So I think that, again, really fits with the diversification theme and suggests that there's still plenty of growth to come when you look at AI and its impact on the broader market.
Yeah, I'm glad you brought up Meta. Meta has been so interesting the past couple of weeks with that potential investment into Scale AI, what they did with Constellation last week, that being announced. But Peter, I want to just zoom out and talk about sort of the temperature of markets as they stand right now, because I'm looking at a note of yours dated from May 14th. The first question you ask is, what type of bear market is this? And that gave me a chuckle because we closed on Friday with the S&P 500 in a bull market, technically speaking. So just talk to us about the rate of change here and whether at the benchmark level that could possibly be sustainable.
Yeah, well, Katie, I think, when we look at long-term history, bear markets take different forms, and that means that they can occur over very different periods of time, both in the correction down and the recovery. We differentiate between what we call structural bear markets, the worst, the deepest, the longest. They're usually associated with asset bubbles and collapses in the banking or real estate sector, like the financial crisis. We didn't think we were in one of those, and we don't think those risks are high. But there's also a difference between what we call event-driven and cyclical bear markets. The cyclical ones are very common, and they're really about equities falling in advance of recessions. They tend to see stock falls of 25 or 30%, but it takes place over a reasonably long period of time. Whereas the event ones are really triggered by a specific factor. In this case, I think the tariffs, that's really what triggered the great uncertainties that pushed equities down. The S&P did fall by roughly 20%. But as the fears of tariffs have wound back somewhat, the concerns about recession have moderated, and that's allowed the equity market to rebound very quickly. And actually, the speed of this rebound is quite consistent with what we've seen historically in event-driven bear markets. So I think we've seen a short, sharp correction. I think if we avoid recession, that's our central view, the downside risks are relatively moderate. But that said, we should also take into account that equity valuations, particularly in the US, are back to their highs, and bond yields are higher than they were at the start of this year. So the upside, I think, is also a bit limited.
Well, how closely are you watching the auctions, Peter? The U.S. auctions off 10-year debt on Wednesday, 30-year debt on Thursday, and even though the S&P is at 6,000 and the VIX is back down to like 17, we're still looking at 4.5 on the 10-year and 5 on the 30.
Right.
Is that really the canary in the coal mine for equity investors?
Look, I think certainly, bonds are providing an attractive alternative to equities. We used to talk about TINA. There is no alternative to equities because cash rates were close to zero, bond yields were very low. That is not true. There are alternatives. And again, this fits into the idea of diversification. Investors are facing an opportunity set across different asset classes, across different regions and even sectors in a way that we haven't seen for very many years. I think there is going to be a lot of focus on those auctions and where bond yields go from here, because if we get further rises in yields, that's going to put more constraint on equities, given the high PE ratios that we see at the moment.
All right, Peter, got to leave it there. Great to get some time with you on this Monday morning. That is Peter Oppenheimer of Goldman Sachs. Meanwhile, let's get a look at some single stocks moving this hour. We start with Warner Brothers surging after announcing plans to separate into two publicly traded companies, as we've been talking about. You have Circle, an IPO, a crypto IPO, continuing to rise on its third day of trading, and Tesla falling, hit with a pair of downgrades because of an uncertain outlook. That sounds like a euphemism. We're talking, of course, about the spat between President Trump and Elon Musk. I thought it was interesting, Baird in particular pointing out that Tesla's key man risk has really been highlighted over the past week.
The Elon risk has been highlighted.
The Elon risk, key man risk, it's one and the same in this instance.
I mean, it's just, obviously a car company isn't valued at $800 billion, right? All of the other car makers globally added together,
and you know them well,
are worth less than $650 billion. So,
yeah.
Coming up, trade talks are underway. That's in London. Henrietta Trey's of Veda Partners joins us next for her read on what to expect in trade, and then here on taxes in Washington, D.C., and in the with the unrest, let's say, in the National Guard in Los Angeles. This is Bloomberg. Let's get to high interest now. Look at what's making headlines around the world. It's the third day of clashes between anti-deportation protesters and the police in Los Angeles. The arrival of National Guard troops over the weekend inflamed residents protesting the sweeping deportation policies of the Trump administration. The LAPD used tear gas and batons to chase crowds back, while protesters threw chunks of concrete and set self-driving cars on fire. Earlier, California Governor Gavin Newsom announced the state will sue the administration over the deployment of the National Guard. And Ken Moelis, the founder of the boutique investment firm Moelis & Co., will step down as CEO effective October 1st. The 66-year-old banker will take on the role of executive chairman. He offered a $25 million retention bonus to stay at the company for 4 more years. Moelis had been saying for years that he would step down before he turned 65 to focus more on mergers and acquisitions. And correct me if I'm wrong, but he is 66. I think that's
sounds about right.
What we discovered this morning. Walmart's credit cards will once again be issued by Synchrony Financial as the retail giant makes a renewed push into financial services. Synchrony issued the Walmart credit card for nearly 20 years until 2018 when it lost the partnership to Capital One. That decision was a big blow, obviously, to Synchrony, and the company's ensuing divorce spilled into court. The renewed alliance with Synchrony is just the latest sign that Walmart is looking to weave itself into the financial lives of millions of shoppers. It's been trying to do that, obviously, forever, but maybe it'll do that with the company from which it was divorced in 2018 and then had a court battle. And the U.S. and China resumed trade talks in London today. Tariffs, rare earth minerals, and advanced technology are at the top of that agenda. Joining us from London for more is Anne-Marie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. And Anne-Marie, I noticed in President Trump's tweet last week where he said there will be no question about critical minerals anymore, there was no mention of fentanyl. Has that problem been dealt with already?
Well, we had heard from officials that they think the Chinese delegation was making progress when it comes to fentanyl. But remember, fentanyl tariffs still in place, and there still are tariffs in place when it comes to China. They were just brought down at a lower level. The talks here today, Matt, as you said, are really focused on 2 issues, both that China and the United States want to make sure that they can get to the bottom of, because they need, 1, critical minerals when it comes to the United States, those magnets, those rare earths. They say that the licensing is not quick enough. Kevin Hassett over the weekend, the NEC director, says they want to see a more advanced pace when it comes to those minerals coming into the United States. And then for China, they want access to the semiconductors, and it's very obvious that export controls potentially was going to be on the table when it came to the second round of negotiations following the talks in Geneva just a month ago, because we have another individual at the table now. Commerce Secretary Howard Lutnick joined Secretary Bessent and Ambassador Jameson Greer of USTR, part of these negotiations. The critical question is, how far is the United States willing to go when it comes to export controls? Are they going to be lifting the most recent ones we saw that had to do with semiconductors and software export controls or jet engines? Or are they willing to go as far as to put the NVIDIA H20 chip on the table? So those are the 2 big sticking points out of these talks and these negotiations. I think what this shows is that they are back at the table just a month after meeting in Geneva. So the future of this relationship, there's obviously going to be some bumps and hurdles along the way.
All right, Anne-Marie, great reporting as always. That is Bloomberg's Anne-Marie Hordern joining us from London. And let's stay on this trade story, because joining us now, I'm pleased to say, we have Henrietta Treyz. She is Director of Economic Policy Research over at Veta Partners. And Henrietta, it's great to have you with us. Let's pick off where Anne-Marie left off, and that is the fact that we're just a month out from those Geneva talks, and it felt like the goal there was also to de-escalate. The goal, once again, is to de-escalate. How can there be any certainty that this round will go any different from what we saw in Geneva?
Yeah, I think that's the core question. They're really just repeating the agreement that they apparently just reached in Geneva, because they plainly either did not trust each other the first time around or didn't like what they saw after Geneva. And I think both are actually true. What concerns me is this enthusiasm we're seeing around Howard Lutnick being at the table for negotiations right now. He was just on Capitol Hill last week, issuing really stark tones on whether or not chips should be exported, whether or not any of these tariffs should come off, whether or not even getting concessions from nations is sufficient to actually take tariffs down, which we know is a standard requirement from China to even start forward progress. So I think this is almost like a repeat of Geneva, and we should all take a message from that they haven't had constructive relationships to be able to even go to the table, have a negotiation, yield some sort of progress, and then count on that to actually deliver. And what we've learned from China in the first Trump term is that you have to wait for things to be delivered before you can make other concessions or just accept them at their word. And they're finding the same thing with the United States. So I don't expect to see any kind of material breakthrough here, and certainly no long-term deal that would remove tariffs.
Henrietta, Lutnick was also saying pretty plainly on Capitol Hill that these tariffs are just a negotiating tool, and that after these negotiations are done, we will have no more tariffs, and that the countries with whom we trade will have no more tariffs on us. On the other hand, Peter Navarro and the CBO also last week said that these tariffs are going to bring in $2.8 trillion worth of revenue, that they're a revenue raising mechanism to replace revenue lost from tax cuts. Is anybody in this administration giving a believable response in terms of the question, what are these tariffs for?
Matt, I'd layer on one more thing there. Lutnick also, in a conversation with Senator Kennedy, made very clear that even in the event that you reach a trade deal, the goal is not 0 for 0 tariffs. It's actually for the United States to maintain their tariffs, in part to collect $2.8 trillion in revenue, which is a humongous score, at least $1 trillion more than anybody had been anticipating in my conversations. And also that even if you reach a deal, the goal is not to somehow then open U.S. markets to Vietnam, to use his specific example. So there's disagreement, not just within the administration, but with Secretary Lutnick himself. Take it to 0, as you suggested, and is in fact what he said, and then absolutely not, we'll never take it to 0. He said the same thing, those two different things in the same Capitol Hill hearings throughout last week.
Well, I'm glad you brought up the concept of tariff revenue, because you think about some of the wrangling over the big. Well, Henrietta also talked about it, tariff revenue. I'm giving our credit to our guests.
With you.
You did good too, Matt. But Henrietta, getting back on track here, when we think about tariff revenue, which you and Matt both rightly brought up, talk to us about the wrangling over the big, beautiful bill and the effects that the tax bill might have on the deficit, because many have raised the point that those tariffs are supposed to offset some of those deficit increasing measures that are in the tax bill. So how do you see this playing out in the Senate if tariffs truly are just a negotiating tool?
Yeah, so the Senate bill and the House bill do not incorporate revenue from the tariffs. First of all, because the senators and the congressmen will not vote to codify the tariffs. They don't like them. If you ask them point blank, they don't want the tariffs to be on. They hope that it goes 0 to 0. This used to be the party of free trade, not whatever this fair trade thing is. So they don't want to take the vote to codify and then count any revenue from tariffs. They're hoping that they'll come off. So that begs the question, what is going on with the deficits? Because they also assume $2 trillion in revenue from the White House through a series of things that are mostly a combination of DOGE plus the tariffs. Now, we know that DOGE has flamed out, a bill that's going to reach the floor this week on the House side and saves $9.3 billion, well shy of the $2 trillion that Elon Musk originally proposed, is not going to have the votes to advance in the Senate. So effectively here what we have is a lot of budget gimmickry on the tax bill, on the big reconciliation package. The House bill increases the deficit by $2.4 trillion over 10 years. And the Senate bill, when it gets released throughout this week and next, is going to go even further than that. I'm expecting 3.5 to be the number that the senators come up with. And they're going to have to square that circle. It's going to be an ugly fight between the Senate and the House. In my experience, the Senate always wins. So for investors, you should expect for there to be substantial $3 trillion plus deficit increases at the end of the passage of the one big, beautiful bill.
All right, Henrietta, really appreciate your time. We didn't get to L.A., but I'm sure that, unfortunately, is going to go on. Henrietta Trays there, Director of Economic Policy Research at Veda Partners. Still ahead on this program, Apple's recovery lags behind the rest of the Mag 7 and the rest of the market. To be fair, we head to Cupertino later this hour for a live report from Apple's Worldwide Developers Conference. This is Bloomberg. Apple is looking to ease its AI issues at its annual developers conference. It plans to introduce new software interfaces focusing on productivity enhancements. Industry watchers will be honed in on its AI announcements. As fears grow, the company is lagging behind its rivals. Joining us now from Cupertino is Bloomberg Technology co-host Ed Ludlow. And Ed, I will just say that, you know, I'm using Geppetto every day, and it's so much more capable than Siri, who can still do just about nothing. So that's the main innovation that I'm looking for. How does it look out there?
Right. Yeah, you and many are looking for, but you'll be disappointed because based on Bloomberg's reporting, it's just not going to be a feature. You know, a more LLM-driven version of Siri is in internal testing. There won't be any iteration of that today here at WWDC, nothing to the sort of direct relationship one has with Apple Intelligence. The big piece of news is Apple opening up to third-party developers, allowing them to build on top of its own LLMs. And that's a very simple ecosystem play, right? As you guys know, services is more than 25% of revenue right now. And if you allow the developer community, for which this event is for, to come in and innovate, frankly, because that's exactly how OpenAI and Microsoft and Google work, it adds value to Apple's offering. But it's not going to be something direct like you were expecting.
And I'm curious, you know, whether the executives at Apple are aware that, you know, this event is really being seen as a non-event by, it seems like, the sell side, by investors. I mean, you think about some of these existential problems that they're facing with AI, and to come out with just a new naming system. Are they aware that this isn't being met with much enthusiasm?
They're aware they've fallen behind, and they're aware there's pressure to catch up. You know, the stock is what, the second worst performer of the Mag 7 year to date. It's down, what, 18, 20%, something like that. But it is traded principally in line with trade risk, tariff risk, supply chain, the pressure from the administration to build the iPhone in this country. If there is an element of where the stock will trade going forward, it is this idea that they do need to show something at some point, that there's a value add in their work in AI that drives not just device sales, but again, this services component. And that's why the most substantive piece of news is probably opening up that access to the work they have done in AI to third parties. You know, when I talk to people inside of OpenAI, or I talk to people inside the Gemini team at Alphabet, there are really talented people in those teams, and they've commercialized very quickly. They have consumer and enterprise products. But a lot of that work is built on the army of computer scientists and engineers that are developers. You know, that's how we have the App Store today, and I think that might move the needle for the stock depending on what is said.
Yeah, I mean, what can AI do, Ed, if they put it inside, you know, Apple Health, if they put it inside Apple Music, if they put it inside any of the tools that they are developing to drive revenue higher? Because that's really the ultimate goal, right?
So one very quick example, live AI-driven translation. Mark Gurman of Bloomberg's reported we will get some iteration of that today. Well, Meta is already doing that through its Meta AI app, and also through the Meta smart glasses, the Ray-Ban smart glasses. So even that one example is something where there's a high expectation we'll see progress, live AI-driven translation, but it's something that the field has already nailed and kind of is already doing.
All right, Ed, thanks very much. Ed Ludlow there, reporting live from Cupertino. And by the way, as we've been telling you this morning, there is a new Bloomberg Tech. That's a much shorter second word in the name of the program, and there's other stuff as well. Today at 11 a.m. And then, coming this Friday, we broaden it out to Bloomberg Tech Europe. Tom McKenzie, T-Mac, hosts that program. It'll spotlight the biggest names and trends shaping the European tech ecosystem every month, so expect to hear a lot about ASML and SAP.
There you go.
All right, Barclays, we're getting some breaking news here. Barclays is going to cut more than 200 investment banking jobs in order to pare costs. So we continue to get job cut numbers out of small job cut numbers out of banks. Of course, Barclays cuts far more jobs than that every year, or loses far more people than that every year through attrition, since they have over 91,000 employees.
Ooh. Yeah.
But in investment banking specifically, they will cut 200 jobs.
Yeah, it looks like that represents about 3% of their total headcount. So small overall, but still interesting sign of the times there. We'll continue
total
to track.
IB headcount, right?
Yeah.
Yeah, because it's like way less than 1%.
Yes, yes. This is primarily investment banking. We'll continue to follow that story, but let's turn our attention to the healthcare industry because shares of Health Equity, it's the largest custodian for health savings accounts in the U.S. They're higher by more than 15% this year. Now, this comes after the company reported it now oversees $31 billion in HSA assets. Let's discuss now with Scott Cutler. He is Health Equity President and CEO. Scott, it's great to have you with us. I actually want to go straight to this statement of intent in the notes that you sent over to our producers, that you want to make HSAs as widespread as 401ks by 2030. That's just 5 years away. As I understand it, there's about $135 billion right now in HSAs. You compare that to the trillions that's in the 401k system. How do you plan to close that gap?
It starts with just the value proposition of the why. When you think about healthcare today, we have an affordability crisis for most Americans. 40% of Americans can't afford a $400 unexpected medical expense. We need, as a couple, about $400,000 in retirement to care for your healthcare expenditures. And so HSAs, as an example, is a tax-efficient vehicle to be prepared or to help you be prepared for those expenses that will happen. And so as we look at the opportunity ahead, we're trying to educate the market on the need and actually the opportunity that you have to save and invest and prepare for your future healthcare needs.
Scott, I was thinking this morning about having you on and looking forward. It's been a while. At this business, do you make more money if people are sick more often, if they use more of that HSA, or do you make more money if they're healthy, if they figure out ways to, not visit the doctor as often?
The healthcare system is designed to treat sickness and not wellness. And when we think about that opportunity, again, to prepare for that future healthcare need, we want you to be prepared from an investment perspective to be able to handle sickness events, unexpected events, but also to be able to potentially invest in wellness. And so a lot of employers, as you set up your plan design, can create incentive around wellness. And some of the expansion opportunities that we see in the current legislation allows people, for example, to use their HSA dollars for gym memberships, again, as a way to incent not just treating sickness.
All right, Scott. Unfortunately, we're having some issues with sound, so we have to cut it off there. Hope to have you back soon. That is Scott Cutler of Health Equity. Meanwhile, let's take a check on these broader markets right now. Of course, we did close in a bull market, technically speaking, on Friday, and we're just hovering around that very key level of about 6,000. We do have some events this week that could push us either up or down when you think about the trade picture and also the economic outlook as it relates to inflation. It feels like right now, though, Matt, we're in a little bit of a holding pattern.
Yeah, sure. The S&P 500 only up 0.1%. The NASDAQ doing a little bit better, and the Dow Jones Industrial Average down 0.33%, being dragged on by Travelers, Visa, and McDonald's. I think in terms of the catalysts, and we built a mega wall, to show you those. Obviously, the China-U.S. trade talks today are key, and what we get out of that. But then you get inflation data on Wednesday, PCI. Normally, we would look very much forward to it, but we're not expecting it to be off the charts. And obviously, if it is, that will move the needle.
Right.
The 10-year and the 30-year auctions, especially the latter, I think what people are paying the most attention to on Thursday are the 30-year auctions, $22 billion. And if we see the kind of problems that Japan has had with their long end, it'll be bad for equity markets as well.
We know that the 30-year has been the least loved part of the Treasury curve. I have to say a watched pot never boils, though, and these auctions are more boring more often than not. So we'll see if we get some fireworks here. Of course, that would be terrible for market sentiment at this point. And like you said, when it comes to CPI, I mean, the expectations month over month expecting 0.2% on the headline level. The annual read only expected at about 2.5%. So kind of crickets there, but we'll have to see what happens.
Exactly. It looks like Jerome Powell and the Fed are getting closer to their target. If you look at PCE, which is their preferred measure, you're at 2.1%, which is near as damn it to it. In terms of the individual stock movers at this hour, we have Merck That's American Merck. Slightly higher as 2 late-stage trials of its cholesterol treatment met their main goals. Cholesterol treatment? I thought we already had cholesterol treatments. Do we need new cholesterol treatments?
They can get better
I felt
and
like
better.
we dealt with that problem.
Things get better all the time. So there you go. Maybe they are improving it slightly there. Let's also talk about Robinhood, though, because Robinhood having a terrible day after on Friday we got the announcement that it won't be included in the S&P 500, at least during the latest round of rebalancing. Of course, the stock had run up a bit in anticipation to that, and now you're seeing the air come out of that balloon.
And Qualcomm is higher, you can see, after agreeing to buy semiconductor Alphawave for $2.4 billion, which I think says something interesting, right? And normally the buyer falls and the target rises. In this case, investors are willing to get involved with a broadening out of Qualcomm's business. So I think it's pretty interesting.
Yeah, well, we'll unpack some of these dynamics at play with Jack Janasiewicz of Natixis next.
Nailed it.
He'll tell us why the U.S. economy is not out of the woods yet. This is Open Interest.
The world is not back to where we were in January. And you can see that when you look at these bottom-up growth rates on EPS. You can see it on GDP forecasts. I think the consensus on GDP right now for this year is around like 1.4. It's inched up, it's kind of stabilized. Next year is inched up a tiny bit, but they're still pretty sluggish numbers. And the 2026 number was actually, I think around 2%. So, we just haven't seen, whether it's earnings, whether it's seen economic data, not just RBC economics, not just my numbers, but street-wide, the numbers just haven't gone back to where they were.
RBC strategist Lori Calvasina speaking to us earlier on Open Interest. Joining us to talk more about this is Jack Janasiewicz. He's a portfolio manager, lead portfolio strategist at Natixis Investment Managers Solutions. And Jack, we've seen a slew of strategists come out and raise targets. There's really been a lot of volatility among what the street is telling, at least, retail here. What is your expectation for the S&P 500 directionally from here? I mean, at 6,000, we're almost back to the February highs.
And I would break it into 2 different segments here. I think short term, we probably still have a little bit more wood to chop. I wouldn't be shocked if we get maybe a little bit of a pullback as we start to get some squishier data in the near term. But I think as we start to move towards the back half of this year, there's probably more opportunity for the Fed to maybe shift their mandate, focus a little bit more on the growth side of the equation, so the labor side of that mandate, and maybe that supportive backdrop through Fed easings potentially kicking up here supports a rally into the end of the year. So maybe short-term pullback, but I think that sets us up pretty well for the end of the year.
So you said squishy data, and I'm taking a look at your notes. You write that the economy is not out of the woods yet. You think about what we've got recently, what we have gotten. We got a pretty good jobs report on Friday. We have CPI expected on Wednesday that isn't going to turn heads in either direction, it looks like. So where are the worry points when you're taking a look at this U.S. economy right now?
Yeah, and I think really to simplify it, it comes down to the labor market. And I know we had a pretty good payroll number from a headline perspective, but from some pretty significant revisions going back over the last couple of months, looking at that 3-month moving average of payroll ads, we're certainly at cycle lows. You look at really the acyclical portion of that payroll number, that's really what's been supporting the job ads portion of that marketplace, something that we'd rather not see. So, I think the simple equation here is, fewer job ads. You're starting to see nominal wage growth slow, and as inflation sort of remains a little bit sticky, that simply means lower real wages, and that ultimately rolls into slower consumption, and that's the big backdrop here. So I think really to summarize it, it comes back to a labor market that's slowly cooling.
We're looking at some important Treasury auctions, Jack, and I don't normally, bring this up because it's like too minutia for me to care, but right now, everybody's watching the long end, right? And we're going to try and sell $22 billion of 30-year debt on Thursday at the Treasury. So how important is that to you? How important should that be to an investor right now?
Yeah, I think the bond auctions will be interesting, at least in the near term, to try to set a short-term sort of, I think, sentiment, if you will. But longer term, it's still coming back to fundamentals, right? It's going to be growth, it's going to be inflation, and I think if you get any sort of whiff of a slowing economy, I think you're going to see a bid come right back into that bond market, and I think that'll pull yields lower in here. So I can appreciate the concerns over the 30-year, but again, if you look at government spending estimates, where we were at the 2 or 3 months ago, people were expecting almost a 2% increase in government spending to where we are today after the big, beautiful bill details are out. That's been cut in half. I think the market understands what's going on with the math here with regard to supply, and as a result, I'm a little bit hard pressed to see that would be shocking, on a treasury here on the auction side. So I think we're a little bit more optimistic, but can certainly appreciate that we might get a hiccup along the way here and there.
So let's build a portfolio together. When you take a look at the equity market, you think about the cross currents that are coming from the bond market and everywhere else. It feels like, where do you have conviction in this market when you boil it down to a sector level, perhaps?
Yeah, I think the big ones for us are simply, it's really growth versus value. You still want to be on the growth side of the equation, and more specifically tech and comm services. When we look at those earnings estimates going out for the next 12 months, you're still seeing double-digit projections. And even if you look at the estimate revisions just since the beginning of the year, those are the two areas of the market that you've actually seen upward revisions. I think you could also make a case for financials in here, and sort of the same backdrop, still pretty good earnings expectations for the next 12 months with revisions up. And you have the potential for some dereg kicking through as well. So those are really the three big segments of the marketplace that we'd be tilting our portfolio. So again, still up in large cap and taking advantage of those sector plays that I just mentioned.
Jack, thanks so much for joining us. Jack Janasiewicz there, Natixis Investment Managers, talking to us about this unchanged equity market that we're watching today. Coming up, we're going to talk about the unrest in Los Angeles as President Trump and Gavin Newsom fight over who's to blame. We are live from California next. This is Open Interest. President Trump deployed more than 2,000 National Guard troops to Los Angeles over the weekend to intervene in protests against immigration sweeps. California Governor Gavin Newsom called the move unlawful and threatened to sue the administration. Joining us now from Los Angeles is Bloomberg immigration reporter Alicia Caldwell. And Alicia, what are we seeing right now on the ground in terms of both the protesters' violence? I saw an actual police car set ablaze in video earlier, and in terms of the military moving in to stop it.
Right, so it's becoming increasingly violent. The afternoons or early stages of days for protests have been rather calm. Initially, they were somewhat spontaneous as well. Tense, but spontaneous, and, not a lot of... There's been considerable growth over the weekend, and there were tussles or a standoff briefly with the National Guard yesterday outside a federal building where smoke grenades, tear gas, and the like was deployed to push protesters back. And then LAPD came in, the Los Angeles Police, and sort of created a buffer zone, if you will, between the protesters and the federal building where those troops are. So far, there's a few hundred National Guard troops from California under the command and control of the federal government who are manning the outside of federal facilities. They're not in the streets at the moment. But their presence has created, as you can imagine, considerable tension. And as I said yesterday, a protest that started rather small, grew over the day, and then became increasingly tense and just outright hostile and violent. As you saw, cars were lit on fire, debris was being thrown at police cars. At one point, according to police, chunks of concrete were being thrown at officers and vehicles and so on. So it has escalated rather rapidly.
Right. And the images coming out of LA right now, obviously stunning. So, Alicia, talk us through what the next few hours look like, what the next 24 hours look like. To your point, looks like things are getting increasingly violent. So what is the plan from the authorities to de-escalate from here?
We don't know yet, frankly. The federal government has said troops everywhere, and they intend to continue to ramp up that deployment. As you mentioned, it's authorized to 2,000 National Guard troops that Department of Defense Secretary Pete Hegseth has said Marines are on standby, active duty Marines. That would be a tremendous escalation in terms of using active duty troops in what is ultimately civil unrest. So we're not there yet, but that has been thrown out as a possibility. LAPD is very active in the streets. They are responding to protests in and around downtown. Primarily, all of these events are in downtown. I am, in fact, driving through the west side of Los Angeles right now, and it is business as usual. People are on their way to work in Century City. You would have no idea what's happening in downtown from this vantage point. So it's rather confined, but more protests expected today.
Yeah, Alicia, I mean, I went to Antioch College, so I'm more familiar, I would guess, than most with Antifa and their resilience. Do you know about, on the protester side, who's getting bussed in, who's doing these kind of protests?
We don't have any idea at the moment if anybody's being bussed in. I will say this, the police chief, Jim McDonnell, said yesterday, the changeover from the day protest, if you will, the demonstrators, to the evening, more violent, more raucous, in his view, does seem more anarchist and people who have done this before. But we don't have any idea at the moment. Like I said, these things started rather spontaneously and sort of organically and have expanded as time has expanded. The National Guard was announced on Saturday night, and we're in place early Sunday. And Sunday's protest grew from a rather small gathering to a far more robust and far more violent by the evening.
All right, Alicia, got to leave it there. Stay safe. Our thanks to Bloomberg's Alicia Caldwell joining us from LA. And you take a look at markets right now, pretty much crickets out there on the S&P 500.
Yeah, coming up tomorrow, Cole Smead joins us of Smead Capital Management, Seema Shah of Principal Global and Spire Global. This is Bloomberg.